Hi, my name is Stephen from Share Navigator, and I'm just going to show you how to complete a profit and loss table for the short put strategy. So the first thing here with the spreadsheet that you're looking at here, you can see that there's going to be a certain amount of data entry. Anything that's highlighted in yellow here in the spreadsheet, that's the only point that you must enter in some type of data. Everything else will be calculated out for you. So let's go through the spreadsheet here. So the first thing you're going to do is change the stock. So let's say we're going to change it to SPY. We're going to do a short put in SPY. And the current share price of SPY is 221.74. The trade date, today's date is the 27th of November, so we're not going to change that. You can see here in the put section, anything in grey is automatically populated. So we're selling the put. And let's say we wanted to change the quantity to 2. And the expiry being used at the moment is December the 9th. But let's say we wanted to sell the December 16th puts. So we change that to that expiry. The action, again, it's grayed out here. It's automatically sell because it's a short put strategy. The strike price we're going to use, let's say we're going to sell the $210 puts because we like to go out of the money with our short put strategy. And the premium that's on offer is, let's say, 75 cents. And the next thing we want to do here is put in our trading commissions. Now, if you haven't placed a trade already, you're going to have to guess what your trading commissions are going to be, but they're going to be in the range, if you're using interactive brokers, about $2. So we leave that there. And the next one, point 11 here, is your premium after commission. So you can see here, this is automatically calculated for you. And what's happening here is it's calculating out the net premium you're receiving after your trading commissions on a per share basis. The probability here, this is something that you're going to enter. If you're using a good broker, they're going to give you your probability of winning. So for a trade like this, it's going to be pretty high, about 86%, but your broker will be able to tell you that. And then the margin required for a trade like this is about 2,500. It depends on what else you have in your account. So everything else then in the rest of the spreadsheet is calculated out for you. So let's go down through that. So the first thing we're going to look at is, what is our max loss? Well, it's unlimited with the short put strategy, because as the share price falls down below the break even point, your losses continue to rise. And that's because the put is uncovered and you've sold the put option. Our max profit is entirely limited to the credit we've received multiplied by the number of contracts that we've done. So the max profit on this particular trade is $148, and that occurs when the share price stays over the strike price, which is $210. The break-even price is 209.26, so anything above 209.26 gives us some sort of a profit. And that's equal to simply the strike price minus the net premium you've taken in. The next column we have here is our leeway to the downside. What we're saying to you here is the share price can fall from 221.74 all the way down to 209.26, which is a 5.63% fall, and you will still make some sort of a profit. That's why it's a high probability trade, because the share price can actually fall 5.6% and you'll still make some sort of a profit. And then your return on margin on this trade, if you are successful, is 5.92%. So because the strategy is technically unlimited in terms of risk, you've got to use margin as a guesstimate in terms of your return on capital here. So what we've done then is we've actually gone on and included some important notes on the strategy that we think you should be aware of. So look at the profit and loss tables below. We're going to go through them now in a moment. We're warning you here that this trade carries undefined risk. So remember that. Losses get large as the share price continues to fall below break even. But lower risk or novice traders should use the bull put spread strategy instead, which does have the defined risk. And if you're ever looking for help, please go to our website and talk to us in the live chat. Now we're going through the profit and loss table down here. So what we're saying here is, well, what if the share price is at 200 or 201 or 202 at expiry? What does it mean for us in terms of profit and loss? So the first thing we put in there is the net credit we received. So no matter where the share price goes at expiry, we will have received $148 in. That goes straight into your cash account. But then, of course, you're short a put option. And if the share price is at $200 at expiry, the value of your two short puts is $2,000. So how do we get that? Well, the strike price we were short on was at 210, but there's $10 now in the money, and we did two contracts. So 10 by 100 because one contract controls 100 shares of stock is 1,000. Multiplied by 2 is 2,000. And the reason it's minus 2,000 is because we're short on the put. We actually don't own it. Okay? So moving across here, that means that our net profit or loss for the entire trade will be 1,852. And we do that for every potential outcome here. And as we go up the scale here, you can see once we get over the short strike price, we make our full profit here of $148. So you can see here that your profit or your upside is totally limited here, but your downside continues to increase as the share price continues to fall at expiry. And then finally, what we've done for you down here, we've put it into a graph form. So you can see here what the profit and loss dynamics are for your short put strategy. So all of that is calculated out for you in the spreadsheet. We would encourage you to practice doing lots of examples here with this spreadsheet, and then to place a lot of trades in your simulated account that we give you. If you're not a member of Share Navigator and you're watching this, we will give you a simulated trading account to practice with so you can put on a lot of these trades and learn in a competitive environment, because we have monthly competitions for cash prizes. So we'd invite you to visit our website if you're not a member and you would like to learn how to trade in a simulated environment.